Welcome to Moneyline. This is Matt McCall. Thanks for joining me here today. Well, this is the first time I'm sitting down since Joe Biden has been declared the next president of the United States, well, at least by the media. And we're going to talk about how to invest going forward the next 4 years with the new administration. We're talking cannabis stocks. We're talking sports gambling. We are talking healthcare. We're talking every big sector out there. I'm naming names, telling you what you should be doing now, preparing for what I believe is still the roaring 2020s. Coming up now on Moneyline.
The buck starts here. Moneyline with Matt McCall.
Again, this is Matt McCall. Thanks for joining me here on Moneyline. It is November 10th, 2020. It is a Tuesday. It's about 10 after 10 East Coast time in the morning here right now. I wanted to get a quick show in here because we got a live event coming to you tonight at 7 p.m. East Coast time. And so I want to make sure I get this out because I think it's important to give you my view on what's going on in the market. Yesterday was one of the oddest days in the over 20 years I've been in the market, and we'll talk about that in a minute. Also, I'm going to talk all about what's going on with the work from home stocks getting hit. The proximity trade that I've been talking about since going back to May is firing on all cylinders right now. What about the vaccine stocks? Big news yesterday. Gold, Bitcoin, cannabis, clean energy. Is it time to buy? The consumer, what's going to happen? What will happen with healthcare going forward? I'm going to talk about all this coming up here in a minute. However, just before we do that, don't forget, and I always forget to say this, I forget it all the time, to like, subscribe, comment, share it with your friends down below. We want to grow this community bigger and bigger every day, every week, and it's been working great. I want to thank everybody for the support and watching and for all the kind words that you've given, even the unkind words that you've given. If I feel a little tired today or look a little tired, it is because I am. We have our monthly issue going out for investment opportunities, which, by the way, I'm going to put a link down here. $99 for the year, folks. 12 issues, access to all of our portfolios immediately when you log in, all of our special reports immediately the moment you log in. Again, for $99 for a year. So I'm going to put that link down below. But our next issue goes out today after the bell. And because I waited because of the election, I want to see what happened. And we didn't know really who the winner was until this weekend, what the reaction was yesterday. So my eyes burn. I've been up all night, been up since 4 a.m., took a couple hours nap. And I've been in the office here since it's been dark. My second coffee, just trying to get through the day. And again, a big event tonight. So that will be going out tonight for you, so don't yell at me with the bags under my eyes right now because they really do hurt. So let's get into it. For all we know, Joe Biden will be the next president of the United States starting January 20th, 2021. Some people say the media has declared it and he's not officially. I don't know. I'm not getting involved in the political side of this, but we're preparing for it that way. If things change, we will change our tune. But all signs are pointing to that's the situation, whether you like it or not. It looks like he will be the president. It looks like the Republicans will keep the Senate. Again, that's not set in stone yet. There's still Alaska, which looks like it's going to be going the way of the Republicans. And then there's obviously two seats in Georgia that are going for a runoff. Again, both leaning towards Republicans right now. So we'll see. Who knows? But we're planning for what the odds are telling us right now would be a Democratic president, a split Congress with the GOP remaining control of the Senate. Democrats actually lost a few seats in the House. But that's what we have. And to give you an idea of how the stock market has done during that time, let's take a look. I have two numbers here. I have one looking at the Dow Jones Industrial Average going all the way back to 1901, so basically 120 years. When we have a Democratic president and a split Congress, which looks like we're going to have for the next 2 years, the average gain per year of the Dow Jones Industrial Average is 7.99%. Let's call it 8%. That is actually the best of all the 6 scenarios. The other scenarios would be Democratic president, Republican Congress, Democratic president, Democratic Congress, and so forth with Republican presidents. This is the best. However, it's only happened 3.34% of the time. So it's kind of rare, but it has been the best performer. And that's going back to 120 years, 1901, not 2001, for the Dow Jones Industrial Average. Let's look at something a little more recent. This is from LPL, my good friend Ryan Dietrich over there. He looked at the performance since 1950 of the S&P 500. And when we have a Democratic president, split Congress, the average gain annually of the S&P since 1950 in this type of situation, again, which we're going to have for 2 years, is an average gain of 15.9%. That's the third best of the 6 scenarios. The best scenario is a Democratic president with a Republican Congress, which may happen in 2 years from now. Who the hell knows? That could be the situation. If that's so, that we're setting up for a potentially really good 4 years, which I think is going to happen regardless. And the second best would be if there's a Republican president and a split Congress. So split tends to do the best, second and third, but the overall best is when we have Democratic president and Republican running the House and the Senate, full Congress. All right, so the numbers are setting up well for us, which I like, and I want to talk about the craziness that happened yesterday before I get into specific sectors. Well, let's actually talk about leading up. Last week, Monday through Thursday, it was only the fourth time since 1950 that we've had 4 consecutive days in the S&P 500 of at least a 1% gain. Only the 4th time in 70 years. I mean, that doesn't do the math. What's that happen? Every 16, 17 years? So the last time it happened was in 82, before that 74, before that 1970. Again, it's going back to 1950. In the S&P, 4 consecutive days of at least a 1% gain each day. We had that Monday, Tuesday, Wednesday, Thursday last year. What's even more nuts about it, it was before and after one of the most contentious presidential elections of modern time. And we didn't even have a winner afterwards. You would have thought it would have been negative 1% for 4 consecutive days. It was positive. So looking back at the last 3 times this has happened, 6 months later, all 3 times the market was up, the S&P was up, with a mean return of 15.4%. 12 months later, the market was up all 3 times with a mean return of 27%. And why is this important? Because it's a rare instance, number one. It just shows when you have 4 consecutive days of such buying power that can last and push the S&P 500, a broad index of 500 stocks, up 1% for 4 consecutive days. It just shows the underwhelming power of the bulls underneath. And typically, as it shows here in history, that will continue. And it gives a good indication of the strength of the market and how it will continue for the next 6 to 12 months. You add that with the situation we have right now with the presidency, and I got to tell you, folks, I think 2021 and 2022 are going to be amazing years, and they're going to be the liftoff to what's going to be the greatest decade in the history of U.S. stock market, the roaring 2020s. And my book is coming out later this year. I'm still fine-tuning it because obviously what happened here with the election, I had to do some fine-tuning, and still we're waiting for some certainty out of the election. Let's put it that way. To give you an idea, yesterday, though, it was nuts. I mean, we gapped open so high, over 1,000 points in the Dow. The NASDAQ was up. The S&P 500 were all up big. But by the end of the day, the S&P had given back a lot of its gains, still closed up 800 points, which is still a very big gain, but closed up 800 points. It was up 3% on the day. All that being said, the NASDAQ lost its gains and closed down 1.5%. So these big tech names that have been leading this rally for years actually closed down 1.5% as the Dow, the boring old Dow, closed up 3%. I just haven't seen action like this in a long time. It doesn't surprise me that we sold off because I think it was a bit of an overreaction to buy into this. The futures were up a little bit based on picking a winner because I think the market just wanted some type of certainty. But when the news about the vaccine from Pfizer and BioNTech came out and said it's the efficiency of it has been 90%, that's pretty damn high, and that's in a phase 3 trial. It's a big trial. So far, so good that we could have an approval by the end of the year of a vaccine. That sent stocks through the roof. And it sent certain stocks through the roof, and it hurt certain stocks. And I'll get to that in a minute. But boy, yesterday's action was honestly one of the strangest we've seen. Today, so far, look, it's a bit of a follow-through. We have the Dow up another 200 points. We have the S&P down 6, so it's down 0.2%, so it's really not moving much. And then we have the NASDAQ down 160 points or 1.4%. So again, the NASDAQ down 1.4% with the Dow up 0.7. We're seeing a bit of a rotation. I think this is a very short-term rotation. And again, I'll get into this in a moment, but it's a bit of a major rotation we're seeing here in the very short term. We're also seeing the small cap stocks, which I really do like to see because a lot of the investment we do is in small cap stocks. But the small cap stocks had a really nice day yesterday, and they're following through again today with percentage-wise the best gains of the big four, of the S&P, the NASDAQ, and the Dow. The Russell 2000 is up 0.9%. So we're seeing a really nice breakout in the Russell 2000. And if I look at the index here of the Russell 2000, we're breaking out to a year high, and we're closing in on breaking out to an all-time high above the level that we hit in 2018. And I think that's going to happen. I've talked about this in the past. I think the small caps are going to lead this rally. And this is where you want to be. And the great thing about small caps, they're beyond inefficient because there's not a lot of people that cover them. Granted, they can get tough to get into. Sometimes there's not as much volume, not as much liquidity. Bid-ask spread can be a little bit higher. But if you're just buying a couple hundred shares, 1,000 shares, you're fine. Sometimes it's harder for me. If I'm trying to buy for clients at Penn Financial, I had one I couldn't get into recently because we're buying a big block and just couldn't get in, didn't trade enough. It kept moving. The market makers kept moving the bid-ask spread on me and screwing me. So I couldn't get in, and unfortunately, because the stock moved. But you will see that happen from time to time. And that's why you don't have a lot of big firms getting into them, because if a big hedge fund or mutual fund wants to make a move in these smaller stocks, they can't. They push the price up, or if they nickel and dime little by little. So you will see inefficiencies, which is great for the little guys, because eventually if the volume gets up, the big guys get in and push the stock higher. So boy, oh boy, I love it. And just to give you an example of how we can find those inefficiencies, let me show you another one of my newsletters. We call it Early Stage Investor. Typically, I look for stocks under $2 billion, and a lot of times they're going to be much smaller than that. That is where I came out with the Crisis and Opportunity portfolio on April 1st of this year when I saw opportunity. Since that time, the average gain of that portfolio is 113%, folks. But 2 weeks before the top, February 5th, I came out the Microcap Millionaire portfolio. Yeah, I heard of COVID. I think at the time they called it coronavirus, but I wasn't too worried about it, clearly. And I put out a portfolio of a basket of, I think it was 1, 2, 3, 4, 5. I can't even count. 1, 2, 3, 4, 5, 6, 7, 8, 9. A total of 10. We added some a little bit later, but a total of 10 microcap stocks. And believe it or not, that basket of microcap stocks that day when it came out, on February 5th, that basket is up on average, as of right now, 65%. And just to give you a fair comparison, since that time, the Russell Microcap Index, so this is the index of the microcap stocks, is up 3%. We're up 65.4%, and it's up 3%. So that is the inefficiency that we can find. We've had 1, 2, 3, 4 of the 10 stocks at least double, some more than that. But I'll tell you, that is where you find inefficiencies. And I think the next 10 years, we're going to see great opportunity in these small cap stocks. I love it. Absolutely love it. All right, so let's get into sectors, because I think that's important. A lot of people are wondering what's going on in my sector, my stock. And I built this around a lot of the questions that you asked on Twitter. So thank you. Again, Matthew McCall at Twitter. I'm sorry about that. And again, don't forget to comment, question, all that kind of stuff on YouTube as well. And yes, I'm pounding Duncan today on a day like this. So we talked about buying and getting elected, what that means. Now let's talk about specific areas. The work from home stocks, those are going to be the ones that did very well during the pandemic. So let's think of Ring Central, which, a lot of people use Ring Central during this. Ring Central has gotten crushed the last 2 days. They came out with earnings last night. We have this in our power portfolio from 2020. Louis and Avalier and I put it in there. Stock's been great for us, been a huge winner. Had great numbers last night, down again another 5% today. Ridiculous. What about Zoom, right? Zoom, ZM's a symbol. Well, Zoom was crushed yesterday and down another 10% today. So apparently nobody's ever going to use Zoom again. That is what they're pricing in right now. What about Peloton? Are people going to stop suddenly riding their bike at home and go rush back to gyms? I hope so, as an owner of fitness facilities. Peloton down another 6% today. How about Slack, another software company that work from home? Symbols work, WRK, down nearly 5% again today. These work from home stocks, I'm telling you, it is like something I've never seen. The way that they're pulling back, it just, were they overpriced a bit? Yeah, they were. Don't get me wrong, folks. They were priced, a little bit. But all that being said, I mean, the beatings that they're giving these companies is just insane to me. I mean, you're just looking, I'm going through a list right here of the stocks that are in the work from home ETF, which I thought was a little ridiculous, but like DocuSign, DOCU. This is a business I use every day to have people sign documents. DocuSign down big yesterday, down another 4.5% today, closing in and potentially breaking to a multi-month low. Just because people will hopefully get back into an office, and it's not going to be for months, I'll tell you that much, even though I wish it was right now, but it's going to be months until people get back in the office. We're in a different world. DocuSign was doing fantastic, and then COVID hit and accelerated it and put it on the map. But people still aren't going to be mailing documents to sign. You send them through email. People don't fax anymore. It's DocuSign. I mean, this stuff is blown. How about another one? This is one that we own. Teladoc got smoked yesterday, down another 3.5% today. Yes, was telemedicine accelerated due to the pandemic? Absolutely, absolutely. But do you think now that people have the same choice? Let's go to a doctor's office, take off half a day of work, drive to the doctor's office, look for parking, sit there and wait, have these damn kids sneezing, coughing all over you. You know the doctor's going to be 30 minutes late. Go back and forth from it tells you the same thing and sends you home with antibiotics. Hell no. I'm going to do that right from my comfort of my bed if I'm sick. There's no way that you're suddenly going to go back to the old ways. So when you're seeing companies like this, from Teladoc to DocuSign, these are great buying opportunities. Could they pull back for a couple more days as there's this rotation out of the work from home, out of the future of the world? Sure, because nothing goes straight up. But use this rotation as a great buying opportunity. I love the suckers that are selling now and rotating into energy stocks. Do you really think suddenly oil makes a return? I mean, XLE, which is the oil ETF, I mean, my goodness. Yesterday, that ETF was up, how much was it up yesterday? It was up 14.3%. 14.3%. I mean, are the oil stocks beaten down? Yes. But I will tell you this, it doesn't mean suddenly that the oil stocks are turning around. There's a bet that the economy comes back, more demand for oil and gas. I agree with that, but it doesn't mean that suddenly the oil industry is going to just boom again. I mean, this is just not realistic. This is a complete overreaction, folks. So let's shift to clean energy while we got you here. Solar stocks and wind stocks and clean energy stocks should do very well under a Biden presidency, because he has been very clear about a infrastructure bill that's going to really concentrate on clean energy, a bill over $2 trillion. Will it be a little bit tougher to get through with a Republican Senate? Yes, I do believe that, but I think both sides want it. And again, this is a trend that was already accelerating. We've gone from basically 1% to 2% of global energy being generated through solar and wind. Last year, it looks like it's about this year about 9%. By the end of the decade, we're looking at like 56%. I mean, this is huge, huge, huge growth, upending a multi-trillion-dollar industry that's not going to stop or start based on one world leader. It just isn't. It's now gotten to a point where solar and wind energy is at the same level in a lot of areas and will be much cheaper than fossil fuel in the very near future in a lot of areas and eventually all areas. And it comes down to money, folks. If unsubsidized solar and wind power is the same price or cheaper than fossil fuels, people will do it. So bottom line, this world's about money as much as you don't want to think so. Just so you know, in the election, I mean, people may get mad because I pretty much stay apolitical, or you might get my views just from the way I speak. But I'll tell you this. I have good friends and I have family that are so far right. I have some family members that think Donald Trump will be announced president in 2 weeks. I have some family members that are still doing cartwheels in the street because Biden got elected. And I think they're both nuts. I'm right in the middle when it comes to this stuff. I'm not going to tell you who I voted for or who I back, but I will tell you this. It doesn't matter who I voted for. I will take the hand that's been dealt to me, and I'm going to take it, and I'm going to do my best with it to help you all make money and achieve that financial freedom you want, regardless. I will tell you this real quick. This is a PSA, my public service announcement for the day. I was at Fox News when Obama was elected. I wasn't an Obama fan when he got elected, and I'm still not a huge Obama fan. I don't think he did much, and that's sometimes good. Maybe I should be a fan. But I will tell you this. When he got elected, I had a lot of clients at Penn Financial Group that called me and said, I went out of the market. I don't like this guy. I don't know much about him. I'm scared. I'm getting very similar calls right now. And what I told them and what I'm telling people now is it doesn't matter. The president truly at the end of the day doesn't have that much power. It's who they surround himself with. It's checks and balances. We have a Republican Senate, and it's about innovation and investing in innovative companies. You go back to 2008 when this happened, and you look at where we are today, the amount of money that could have been made in innovative companies is astronomical. And the same is going to continue. It's just a matter of positioning yourself well. But my bottom line here is don't let your political views get in the way with making the money you've worked so hard for work for you. Don't let them get in the way. As much as it may suck, as unhappy and as angry as you may be with the outcome right now, it's okay. You'll get over it. Move forward. Don't let that hurt you. Don't spite yourself because of it. Because people who got elected that you may not be happy with don't give a shit about you. So don't let them ruin your financial freedom. Use what they're giving you and let's use it to our advantage to make some damn money. And that's why I'm here. All right, so solar stocks taking a hit. Even though Biden is going to push for it, the solar stocks gapped open really high yesterday, up 7%, closed down, and they're down another 4.6% today. I love the clean energy solar stocks. I think it's a bit of an overreaction. It's kind of buy the rumor, sell the news. I said this was going to happen to the guys in the office. I said, guaranteed, if Biden gets this, you're going to see it move up and then pull back because people buy into it and then it happens and they sell. If the solar stocks pull back a little bit more, great buying opportunity for me. I love the wind stocks too. A lot of people ignore those, but I think the wind stocks have a great upside potential as well. Often overlooked, but we have some solar stocks in our portfolio. We have some solar stocks for Penn Financial clients. And I think they're great. And for new clients at Penn Financial, I'll probably use a pullback to establish some positions in some solar stocks. So I think there's some good upside here in the years ahead. It is hyper growth. One real quick too, back to the work from home stocks. Somebody asked about Nautilus, NLS, which is similar to like a Peloton work from home equipment. Man, oh man! I mean, you look at the chart here of Nautilus. It's amazing. It closed at like a 15-year high on Friday. It closed at 2780. We're at 1820 right now. So we're down big yesterday, down another 17% today. It's just crazy to me. Did Nautilus get ahead of itself? Yes, it absolutely did. I talked about this. I said, Nautilus is the kind of stock that was overvalued. I wouldn't catch a falling knife right here, but if it comes down and it builds a bit of a base, maybe look at it. But this is the kind of stock where it got ahead of itself. You knew it was going to pull back at some point, and unfortunately, this day and age, when stocks pull back, they fall fast. But do I think the company's done because suddenly gyms will open again? No. As a matter of fact, going into effect on Friday here in Maryland, gyms are going down to 25% occupancy again. So we're going the opposite way. This just because the vaccine had good news yesterday, we're nowhere near it. So Peloton and Nautilus, I think, will continue to do very well. And again, I hope we get back to being in gyms very soon, but I don't see it happening anytime soon, unfortunately. That leads me to the proximity trade. In May, in my early stage investor portfolio, I talked about proximity trade. We put a stock in there. It was a stock that got bought out. We took a nice 90% gain, which is awesome. We got a quick gain on it. So congrats. It was a biotech stock. It was my proximity play at the time. But let's take a look at how some of them are doing and how some did yesterday. The airline ETF skyrocketed yesterday. Some of the big names that were up, Spirit Airline was up over 20%. Allegiant Air, Spirit Airlines SAVE, Allegiant Air ALGT up double digits, up another 0.5% today. Even some of the big names like Delta were up. I mean, airlines were up huge because obviously there is a vaccine. Hopefully people start flying more and airlines get back to where they need to be. Cruise lines, very similar situation. Yesterday we had Carnival Cruise, CCL, up huge. Down today, 11%. Some profit taking also. They're doing a secondary offering, so that hurt them. Royal Caribbean, RCL, very similar, up huge today, down 4%. Some profit taking on that today. Restaurants also doing well. And how about Dave & Buster's? Yeah, we've all been to Dave & Buster's, right? I have nieces and nephews. I have friends who have kids. Dave & Buster's was up almost 40% yesterday, up over 50% at one point, down about 2% today. Again, a little bit of profit taking there. But again, vaccine leads to proximity, people going back out to restaurants. TripAdvisor, TRIP, up huge, up another 4.5% today to the best level since June. Again, vaccine, more people traveling. Casinos, sports, all up big. MSG Sports, which owns the Knicks and the Rangers of New York, two of my most hated teams. But MSG, I love, and we have the stock in a portfolio. Up big yesterday, down about 0.5% today. Again, a little bit of profit taking. You look at casinos, look at Caesars, CZR, up huge yesterday. At one point, intraday was at a new all-time high, down 3% today. Sports gambling. Sports gambling is big because not only more sports, more people going to sporting events, more gambling. We saw 3 more states pass sports gambling initiatives. One here, which is my new home state right here in Maryland, passed it. We now have 25 states that have some type of laws passed. About 19 in D.C. are active. The other 6 have passed laws, are in the process of getting up to 25. I believe at some point we will see all 50. This is a big boom because obviously states can tax it. States need the money. So you're going to see more sports gambling, kind of that wave go across the country. Based on that, we saw Penn National gapped up big but closed down yesterday, down another 5.5% today. DraftKings, another player in there, DKNG, gapped up yesterday, closed down again today. It's just this weird action, man. It's some weird shit going on out there. I can't tell you what's going on. Vaccine stocks. So the 2 big ones were the news that came out yesterday were Pfizer, of course. Pfizer was up on the news. PFE down today about a couple pennies, giving back. And then BioNTech, BNTX, which I'm happy about, was up big yesterday and is up another 3.5% today. We do have this stock for some clients at Penn Financial Group, so we're up big on that. I'd love to see this. Stock is trading at an all-time high today if it closes here, so congrats on that. A couple others, Moderna is one. It was up yesterday, down 3% today. Somebody asked about Vaxart, VXRT. I don't really follow this one. This one is one that rallied from $2 to $17. I remember saying stay away from it. Down big yesterday, up today, but down to $3.75 a share. Again, I don't know much about it, but the action looks terrible. I would stay away from that one. I think you probably end up having 3 big vaccines, and I've been saying this from day one. BioNTech, Pfizer, Moderna, and then number 3, I think will either be Novavax and VAX could be one of them. But again, that's down 10% today. It could be a Johnson & Johnson early next year, J&J. It could be one with AstraZeneca and Oxford over there. That one's up 4% today, AstraZeneca. So there's a lot of different ones that could come out. I think the 2 that have the best, though, right now would be the BioNTech/Pfizer and the Moderna one, I think, have the best odds of being 1 and 2 coming out there. So that's the vaccine stock. So now let's talk a little bit about also being passed was cannabis. Cannabis, it was on a ballot in 5 more states. 5 more states passed it. Biden and Kamala, the vice president, Kamala, I always pronounce it wrong. I think it's Kamala. They are looking to decriminalize marijuana, cannabis, pot, whatever you want to call it. So the stocks have been rallying on that news, and we're seeing a bit of a pullback here today for sure. We even saw the Canadian ones really rally big yesterday. I love the U.S.-based ones. I think that's where you're going to see the best value. I think we're going to see the big upside. That's where you're going to see all the growth, and that's where you're going to see, obviously, this being the largest economy in the world. If we do see decriminalization, that's number one. I think we'll eventually lead to legalization. That's where you're going to be invested in the U.S.-based ones. I talk about that in a newsletter that will be going out later today. So that's a sector to keep an eye on. Also moving are Bitcoin altcoins. Bitcoin over the weekend came within ticks of 16,000. It broke about 15,000 in the last couple of days. First time we've done that since January 2009. Right now, let's take a look and see where Bitcoin's at right now. I will pull that up for you. Catch my breath here for a second. I'm telling you, I'm tired. Coinbase, we got Bitcoin at 15,150 right now. I love how it's holding around that 15,000 level, even though we're seeing some the markets sell off a bit. Dow up, but the rest of the markets sell off. So that's actually good to see that action in Bitcoin, in my opinion. So that is a very good sign of what I see right here in Bitcoin. And the altcoins too look well. So I think these are great buying opportunities. They're around 15,000 here in Bitcoin. Altcoins where they're at. One thing we do know is going to happen is Biden has been very clear about this. He's going to spend through stimulus, through infrastructure / clean energy bill, and probably a lot of other things. With spending comes the printing press going to overdrive. With that comes potential inflation. With that, I think we see the U.S. dollar fall. I think interest rates will stay low. All this leads to the fact of hard assets going higher, and the true hard asset right now, above gold and gold above silver and precious metals, to me is Bitcoin. It's a much better investment. And you've seen it this year so far. Bitcoin up over 100%. Gold up, about 25% or so. I think Bitcoin's the much better asset class. I do have some exposure to gold and silver for clients at Penn Financial Group in different ways. But I will say that Bitcoin is definitely my favorite of the two. I don't mind you mixing and matching a little bit, but I think we will see Bitcoin 20,000 a lot sooner than most people think. And I think 40,000 well before the Dow gets to 40,000, folks, as I've mentioned here for months. Back to clean energy real quick. One other thing to take a look at is people keep asking about the electric vehicles. I love them. They're getting hit a little bit today. Again, I think it's a bit of profit taking. A lot of them rallied yesterday. A little bit of profit taking here today. It's okay. It's short-term noise. Don't let that get in the way. The fact that there's about 1 to 2% vehicles on the road right now are electric, and that's going to go up in the next decade, probably tenfold. That's huge, huge opportunity. Don't let a day, a week, or a month shake you out of this stuff, man. Don't do it. Then there's healthcare. You know, when it comes to healthcare, to me, healthcare stocks surprised me with the strength they had yesterday. Down a bit today, but holding up better than the overall market. I will say this. I don't know where we go with healthcare. Biden wants to go back to Obamacare. Will he be able to do a lot of it with the Republican Senate? I don't know. We'll have to wait and see. The one thing I'm certain of, the innovation that is going on in healthcare right now between biotech, AI and drug discovery, sorry if I twitched my eye, AI drug discovery, personalized medicine, genetic testing, genome sequencing, liquid biopsy, early cancer detection. This stuff, I don't care who is a president, I don't care who the world leaders are, they cannot slow this down. You want to be in all these sectors. Telemedicine, throw teledoc in there. That will not be slowed down. This is the reality of where we live today, and it's the reality of where we're going. We're going to see breakthroughs in the healthcare field like we can never imagine in the next 10 years during the roaring 2020s. Use all pullbacks to buy into strong stocks. This is where we're going to make money, folks, along with many other areas. All right, I covered a lot today. You know, we covered kind of my quick view of the election. And again, investment opportunities members, you'll be getting your monthly newsletter today after the bell, probably around 4:30 Eastern time. I can't even talk. 4:30 p.m. Eastern time. Don't forget tonight to tune in to our amazing event tonight. We're going to be talking about something that's not Bitcoin, that's not stocks. I'll tell you, it's going to be about private investing. It's going to be awesome. Just go to blockbusteropportunity.com. Sign up for free. It is free to watch. It starts at 7 p.m. East Coast time tonight. And I hope you can join me and see that. But again, any questions you have on the stocks I mentioned, none of them are recommendations. I may have some exposure to them through myself, through newsletters here, through Penn Financial Group, which is my investment advisory firm where I manage clients' money that I own. I've been doing for 16 years. So we could have exposure to all those. Again, not buy or sell recommendations here, just so you know. But I'd love to see you tonight. Join us for the blockbuster opportunity. And again, Investment Opportunities comes out tonight after the bell. And I will put the link in there if you want to join for $99. You get access to everything I talked about, all of our portfolios, and 2 new stock picks that are coming out tonight. I will tell you this, they're in the clean energy area. All right, folks, thank you so much for watching. It is Tuesday, November 10th, 2020. I'll be back Friday. Unless something crazy happens, I'll be back sooner. But hopefully I'll get a nap in between that, and I'll be back raw and ready to go. Thank you so much for watching once again. Go out there, enjoy yourself. Be safe, be happy. Hug someone, tell them you love them. I'm Matt McCall, and that's been your Moneyline.
Moneyline with Matt McCall. To find more information, head over to McCallMoneyWire.com. That's McCallMoneyWire.com.